Oh, now there's a question here for you. It says, how much portfolio flows for equities can still be allocated to South Africa?
I think if you look at emerging market equities from a South African perspective, there is potential for inflows into the local equity market. That's really an attractive, with all the positive developments, that's an area where you can potentially see re-rating. The other point I'd like to highlight is that the real yield on the bond market in South Africa is very attractive for the global investor. It's 4% round about there. And that's very attractive. The US is giving you a real yield of close to 1%. So when you look at that from a global perspective, South Africa remains attractive both on the bond market and on the equity market. So you can still see some additional flows coming through, I believe.
What are you telling clients about your actions coming out of this budget for the next 6 months?
I think we're definitely more positive on South Africa, specifically domestic equities. So we'd be looking to upweight and increase our domestic equity exposure. Prior to the budget speech, post Cyril Ramaphosa, we had increased our bond exposure, and we've gotten the benefits of that with bonds rallying and the rand coming in. So we wouldn't look to increase bonds given where they are at the moment, but definitely domestic risk assets are looking a lot better. We'd continue to maintain our offshore exposure. As said, the optimal allocation is 30% for a South African investor. And I think with global growth prospects improving and the rand strengthening, it is an opportunity to maintain high offshore levels. And that's pretty much the general view for us right now.
Mm-hmm.